doing today. What on earth is going on with this price action? It's crazy right now. Let me know in the comments how you're doing, how you're coping with Bitcoin's craziness right now. Are you guys trading? Are you sitting out and just watching? What's going on? Who have we got here today? Ben, how you doing? Donna, Brad, Moni, Ian, Alicia, Katie, Ryan, Victor, Lenny, good to see you. Morning, James, Melina. Alpha's in the house. Brandon, caught the short. Well done. All right, well, let's have a look at this. Look at the difference between Bitcoin and Ethereum right now. Bitcoin's almost done a full reset, or close to a full reset from yesterday, and ETH is creating a higher low. So very, very interesting. I was actually watching Bitcoin right before we went live because there were a lot of orders, a lot of long orders at 21. Was it 20? Yeah, 21.2 to 21.3, which would have been a full recovery of this candle here. So I was hoping that would hold, but it hasn't. But before we get into what it's doing, this is typical dead zone behavior where, it's a bit tricky to trade. But let's talk about yesterday, because we did get a spike right into the longs that we had identified yesterday, that there was a large level of longs at 21,150. We did get that spike in there. Out of there, on the 15-minute time frame, we had our 3 hits to the high. So we had one here, we had another one in this cluster here, and then we had the third one, which all week we've had this target between 21.8 to 22,000. So you can see that we've wicked right into the middle of that zone. The conclusion that I draw from this is, if you really want to trade this week before the news events that we know are coming up tomorrow, you're really better off scalping in this environment, in my opinion. Having your target set at your 3 hits to the high on a 15-minute, or having them set at your 3 hits to the low on a 15-minute, and don't try to ride all 3 levels on a higher time frame, or ride these 3 hits to the high, stay in for the retracement. Then it's too risky. There's no guarantee that we're going to break any of these levels. For the entire week so far, we've held this range. So this was our one attempt to break out with a pretty big wick off the 800, which was our target, as I mentioned. So job done there. But that's the thing, the job is done, right? So there's no guarantee that we're going to continue to the upside. And that's one thing we have to be aware of. The other thing too is that we've crossed under all the EMAs now for Bitcoin. We've crossed under all of them. The other thing that makes trading a little bit difficult right now is it's much easier to understand the levels when you have confluence between ETH and BTC. And right now we kind of don't, because as you can see, we've crossed under all the EMAs for Bitcoin, but we're still quite free and clear of the 200 EMA for ETH. So that might change shortly, depends on how Asia opens. But it's very, very tricky. Now, let me just stick with Bitcoin for a moment. So the moral of the story is, if you grabbed the entry yesterday, hopefully there was a take profit set in this zone. From there, it does look like we have created an M formation here, which is not great. If you're wanting to have more upside, these sell orders are now gone. We're going to redo them. This previous market maker candle has now mostly been eaten into, so that would probably be around a 50% recovery, I'd imagine, of the previous candle. Let's have a look where we have any potential high-level longs now. So if we're looking at the heat maps, what have we got here? So we've got hang on, it's this candle here. We've got 1.3. Oh, this is a pretty big area actually, at 21.2 to 21.150 combined. That's a fairly decent area, which would be, let's mark that in here, put it at 21,200. Yeah, so that's basically on the top. We'll get rid of this now. It's basically back to where we were yesterday. Now, does that mean we're going to get all the way down there? Of course not, because, you know, we do have these other orders above that would have to get filled first. But it's a very big range of buys. You can see how red it is up here. And then when you move up above price, we don't really have a big range of shorts anymore. We still have the high level at 22K, which was really interesting, because if we look what happened yesterday, we're looking at this spike region here. What we can see, this wick here was that right there, and we had 2.4K at 22,000, but underneath we had 1.1 at 21,950 and 1.1 at 21,900. Now that wick only went into the first part of that, so only the 21,900 shorts got filled, which is what was enough to send price down, that they didn't need to come into this zone to send it down. But the thing is, the orders are still there. So some of them got removed a bit lower, but these 22K orders are still there, you know, 2 4-hour candles later. So that is definitely an area that they're wanting to keep price under for now. And I definitely keep an eye on that. Now, currently we are, $700 away from it, just about. So we may not get there. One thing I do notice a lot is that prior to what is perceived to be a big news event, because social media turns it into a big news event, is that we tend to get a lot of large orders in a random area that is far away from price. So that could be what is happening here with this 22K number. And we get it both sides. So when we come down, you can see we've got this 1.1K at 20,350. So the conclusion that I draw from that is that this would be speculation, getting ready in advance to pick up an entry dependent on what news comes out of the news events. And they kind of just sit their orders there and wait. And hopefully, you know, if the news is bad, price will head down, pick up their order, and then we recover usually, because usually it's just a one sharp move. Or if the news is great, we'll spike up, hit those 1.9K orders, and then, you know, go back down from there. So sometimes that is what can happen. These orders are just here well in advance. But also, one thing you have to watch when you see that, because it can also be trickery, like they're there to trick us into believing that price is going there. So what you have to watch closer to the news events, like minutes before anything is released, you have to watch if the orders stay there. Because as we get closer, and when the news is released and a candle starts to move at speed, that's the point where you see them disappear if they're fake orders. So just keep an eye that those are levels that are hanging around for the moment. We're skeptical of them. That doesn't mean much for like trading right now, but it's just, you know, we are heading closer to that news event. We want to be careful. What we can see right now is that it does look like potentially there was just a dead gap zone hit to the low to kind of maybe freak people out, induce shorts. We know the dead zone is the most highly manipulative point in the day, because the shorts aren't really there anymore. We're back in the 800s now. 800 is high, but it's not all that high to cause a huge rejection. So we're back in the 800s here, but down here for the buys, we're still fairly high. We've got 1.2 sitting still at 20,900, and then all the way up to 21,200. So let me just quickly put that in here as a buy zone. So we've got 21,200 to 20,900. So that gives us a visual of, you know, kind of where the large buy orders are for the day. So we need to wait and see what Asia does. Has the dead gap zone already set the initial low of the day? We won't know that until it's gone sideways for at least 90 minutes after Asia opens. So we need to wait and see, but there's a potential that Asia might bring us down more into this zone here pick up those orders, and then maybe we'll bounce out of there, or maybe those orders will disappear. One thing that was so interesting before I went live today, and I wish that I was live to show you, I was watching Agritrade at the time. And so Agritrade, if this is a really good website to track, because what it does is it puts all of the exchanges, large orders in one place. So you can kind of see as the orders come in, and these are filled orders. So you're watching orders live, and you're looking out for things like this. These 1.5 million come in. What happened during this move in the dead gap zone just now, we had probably about, maybe 4 or 5 short orders over 1 million came in here. And then as soon as we got to this candle, it switched to over 1 million long orders. Like there was about 3 of them. And there was one for 2.3 million. So just very, very interesting to show how, what's going on behind the scenes. So that's a really good website to watch. I'm kind of keeping my eye on that at the moment, especially because as I see price come into these areas where there are large buy orders, I want to see, because this is only showing me Binance, right? You can look at other exchanges up here, but I look at Binance for the highest volume, which means I don't know what's going on the other, what is it called? on the other exchanges. But here I get a big picture view of all the exchanges. So once I can see those really large orders coming in, I'm like, okay, I can see, especially in the dead zone, I can see that this is big whale manipulation, because that's really the best time for whales as opposed to market makers to play their games, because they're not competing against market makers, and whales can't compete against market makers, right? So yeah, that's that. So discount the dead zone for now. If you did short the M, great. Just be very, very careful if price, if it does come down into this area, number 1 would be a good area to take some profit. But if it starts to close back above those EMAs, that, this was just a dead gap move, and I'd be very, very careful. So where are we now in the cycle? Don't know. What we have is definitely the 3 hits to the high. We definitely have the M formation. It just doesn't make sense right now that we would continue down if the overall sentiment out there is that the news tomorrow is going to be terrible, which I think it is. People are expecting something bad to happen. So we just have to keep that in mind, because if they're expecting something bad to happen, price may move up today in preparation for a sell-off tomorrow. However, if that whole narrative flips and people start to think, okay, they're going to do whatever it takes to bring down the Dixie, then it's the opposite story. And if the Dixie comes down, we're free to continue up. So degens are opening longs and shorts. Yeah, probably. Agritrade is what is this website? How do you spell it? AGGR.trade is this website. I really, really like watching this live when there are news events, because you can really see the manipulation that's going on then as well. So I want to talk about let's have a look at what ETH is doing so far. ETH has just been so much easier to trade this week, because, we could see the W a lot more clearer. When we had this retracement, still created a higher low. We've had our move up. The 800 EMA was the target. We have wicked off there twice. So I would be very, very cautious in continuing to hold longs from here. I would say that our trade on ETH is complete. And to be honest with you, if you haven't already got the tone in my voice, I think it's a no trade day. I think it's a no trade day until after the news event is out, because I think we're going to have high manipulation today leading into it. And then obviously, high manipulation as we get closer, which just really, like, if you made money this week, and you're going to try and force trades getting closer and closer to the event, you're just going to give it all back. Just exercise patience, let it happen, and we'll find a good trade after. So yeah, I have to be honest about that. I personally am not trading. My trades are done, and I'd rather just wait and see what happens. It's just what I find when there is so much hype on social media about a singular event, that really big games get played, and usually the opposite happens to what everyone says is going to happen. So the moral of the story is, with ETH, in my opinion, this trade is complete. That was the imbalance that we were waiting to get filled. We can see here that we did fill it, and we've created an M formation. Is that an area to short? Up to you if you want to take that risk. It's not for me. I would rather wait for if this was to head down further, I would rather wait to really move away from the EMAs, come back to retest them, and then short from there. These were the two areas yesterday that we were thinking ETH might bounce. So we did bounce in between them. So everything was fine for an ETH trade up until this point in time. At the very least, I would, if you really want to hold this long position, I would at the very least take some profits off the table, because you may regret it. And it wouldn't be wrong to hold it, because at the end of the day, we are still creating higher lows, higher lows. But you do have to be realistic that we have rejected that 800 EMA. So if I was to think that this was going to continue to the upside, I want to see it now break the 800 EMA that is sitting currently at around 1685. Either side of that, it's too much of a risk. For continuation to the downside, if this is going to be an M formation, then I'm looking for a lower high to be created somewhere in Asia, and that lower high would hopefully stay clear of this area here, because we know we have an imbalance there, so we don't really want price to come too much back into this candle. A wick in there is fine, half a candle is fine, but we really don't want price to close back above, because if it does, this M formation is invalid, as the trapped traders will get released. So if you're thinking the formation is complete, what you're waiting for now is a retest into that area for potential further downside. Now let's have a look at what's going on here. There's a couple of things I think that are a little bit more important to watch right now than crypto itself, if you're wanting to trade crypto. And that is, of course, the Dixie, the Nasdaq, and the S&P. So number one, if we're to have more upside, if we're to be free to have more upside on Bitcoin and Ethereum, the S&P and the Nasdaq, need to come back and recover their previous vectors. So that's sitting here from the 23rd of August for S&P. We've wicked up to it once, we've wicked up to it twice, but we have not yet managed to get right into that zone. And it's looking good though, like it is looking like a bit of a V-shaped recovery, but we're not there yet. And we're only just now looking like we want to get above that 50 EMA. So for me, I want to see the S&P recover that candle. Then I'll feel a little bit better that, crypto's got more upside today or tomorrow potentially, but it's still going to be major caution, because it's going to have its upside closer to the news event. And then number two, for the Nasdaq, it's this one here also from the 23rd of August that we've wicked into once, wicked into twice, but at this point in time, we have not fully recovered it. Looks like we're trying to get back above that 50 EMA. These are all on the 1 hour time frame. So we're above the 10 and 20, great, but we've got to get above the 50, then we've got to get above this zone. If both of these can get above that zone, then I think Bitcoin and crypto will be less harder to trade, because these should start a little temporary trend, and then Bitcoin will be free to do what it wants to do. One very interesting discovery on the Dixie that I've noticed that I just wanted to point out was there is a potential that Dixie has peaked at this point in time. Now, if that turns out to be the case, that is going to be great for the markets. But it does at this point look like we have a final damage M formation, final damage being where the second peak is higher than the first peak, meaning that, in things that you can trade, it means they've trapped, they didn't trap enough people here, so they came back for a higher high. So it does look like an M formation there. And then that does look like the first drop there. This does look like the M formation retrace. So far, this is starting to look very good for Dixie to have a little bit of a breather. What I really want to see, however, and this candle that's just opened is kind of confirming my suspicion, but let's not jump ahead because there is still 24 minutes to go. But what I really want to see is now it break this previous key level at 108.44422. If we can break down below there, then our trades are going to be free to run to the upside. So this is the one to watch now, and especially after or around the news events tomorrow. This is the one. It's tomorrow, isn't it? I saw someone just write Saturday. Let me have a look. We have got, so today's Thursday, so we've got unemployment might have some little effect, but Friday all day is the Jackson Hole Symposium, and then 10:30 p.m. is the core PCE price index. They're the ones I'm talking about. So yeah, Friday. These ones as well, like obviously, but it's Saturday, and if you follow me, we don't trade on Saturday, so who cares? Right? Isn't that right, tribe? So yeah, anyway, Friday's the main one to look out for. And mind you, we should be free anyway, because we're not free of this one, but we should be free of this one because we try to close our trades by end of UK. So we should be pretty safe tomorrow. What else do I have for you? ETH. Let's talk ETH. So oh no, I already did talk about ETH. Guys, I think I'm done. Let's have a look at the liquidation levels. No, not that one. Oh, hang on, this doesn't want to respond. Very interesting jump in the leverage. Crazy jump in the leverage. But this sheet looks very empty, doesn't it? So it really goes to show that even though we have a jump in the leverage, the market maker's just wiping us out, you know? Oh yeah, think it's going up? We'll wipe you out and take it down. Oh, I think it's going down? We'll wipe you out and take it up. They're having the time of their lives in this zone. When you see how white it is close to price, the only reason it turns white is because that leverage got wiped out. So very scary times right now. But the delta at the moment is, hang on, where is it? Is at 6.9. So that would have just wiped out recently because it was sitting at 9 billion this morning. So the dead gap zone wiped out about 3 billion or 2 billion in the dead gap zone alone. So it goes to show price does not need to move all that far to have a big effect. So that means that these longs here in this orange zone would have just got done for. These ones here. So orange is orange, where are you? Orange is 100x traders. This other, I don't know what color this is 50x traders. So they're done. Again, another reason why trading high leverage is unnecessary, because it doesn't give you room. But we do have this really big area here to come for if they wanted to. That is at 20,900. I'm fairly certain we saw those orders in here around 20,900, didn't we? Yeah, we've got 993 at 20,900. So just be careful of that level. There is liquidity available there if they want to bring it down to that. Let's have a look at above price. They really would have to go fairly high above price to get into these zones here if they wanted to take out shorts. But they do have the liquidity available up to around the 22.5 mark. Probably looking more in this zone here for them to come to if they wanted to ride price back up, which is going to be somewhere under that 22K now. But let's go back to Bitcoin now. Yeah, let's see how we go. So what we want to see is if there's a potential for more upside today. I do have a feeling that this was the dead gap zone fake move down, but that will only be confirmed if this ends up becoming the initial low of the day and we hold it. So it does look like we're already moving out of it, but we want to hold around this level for at least 90 minutes. 60 to 90 minutes. If we do, we would say the low of the day is in, the initial low of the day, and this was a fake move down just to wipe out some of that leverage, and we may come up and try and attempt this 800 EMA again. That's how I'm kind of feeling about that. ETH does feel a little bit safer, but as I said, it could retest here and head further down. If it breaks up and beyond the 800 EMA, then we're looking at this next area at 1720 to 1730. But be very careful. It's just be careful. If you're unsure, be unsure. Watch and learn instead. There's always going to be another day to trade. All right, guys, I hope that was helpful. If it was, please smash that like button. Help me get these videos around the internet. I can see 43 likes and 160 watching. So that's more people don't like this video than do. So thanks very much. But in addition to that, we just hit 11K on here today. So thank you for everyone who is subscribed. Does mean a lot to me, and 11 is a lucky number. So let's go to 100K. All right, guys, have an amazing weekend. This is my last update for the week, and I will see you guys next week.